Welcome to this introduction to a wealth screening review. When you receive your wealth screening results, it's returned to you in a scorecard format, which would be this area right here. The file has been segmented for major gift potential, upgrade annual giving potential, and plan giving potential. It's also been divided out into the different wealth screening data points that are significant in the screening. And so I'm going to go through a review of what the different data points mean in the rest of the file and then explain how to use the scorecard. So the first thing you receive in your file is age. Age comes from two places. It comes from, actually it comes from one place. It comes from household demographic information. So you may look at somebody in your file and say that this person is not 58, this person is 55. Because this information comes from household demographic information, it means that somebody in the household is 58, not necessarily the person that you screened. It could be a spouse. If there's a larger discrepancy in the age, then it means that it's probably attributing the age to an adult child. So if your prospect is 70 and the age comes back as 40, it could be that it's linking that household to the adult child instead of your prospect. It's good information, but it's important to know that that does come from household demographic information. The next score that you have in your file is called a P2G score, or propensity to give. This is the Wealth Engine analytics score that they provide for your file. And what they do is they take your file and they compare it to the characteristics of high net worth individuals. And the more characteristics they have in common, the higher their score. And the highest score actually has the lowest numbers of 1, 0 right here. The one in the first position is related to the number of characteristics they have in common with a high net worth individual. So the types of assets that they're holding, real estate, stock, company ownership, the type of luxury items they might have, a boat or an airplane, the type of giving they have outside your organization to other charitable causes, and political giving. They look at those factors as characteristics of high net worth individuals. So the more of those they find on your prospect, the higher the score, in this case 1, and a description of excellent. The second position is related to gift capacity, the amount of money they can give over a period of time, as well as the quality of match for those characteristics that they found. And the quality of match simply means they've matched your John Smith at 123 Main Street in your city and state to those data points, real estate, stock, company ownership. So the more of those they match, the higher the score, in this case 0. The wealth screening company would tell you just focus on the propensity to give score and nothing else, and you're golden. You don't have to do anything else with the file. I think it's a little more complex than that. It's a good thing to look at, but it's also important to look at other things in the file. So your 10 through 15 is in the excellent description category, and those are looked at for major gifts. Your 20 through 25 is considered above average, and those are looked at for annual giving upgrades as well as plan giving. And so those are the two areas to focus on the most, is your excellent group and your above average group. The next data point I have in your file that's not highlighted is total assets. And the reason I don't have it highlighted is because it's misleading. The wealth screening company doesn't look at just solid financial assets. So when I see total assets, I think total financial assets, and most people do. But the wealth screening company also pulls in household demographic information. So the household demographic information, if you have somebody in your area where there's a zip code and one end is the highest, wealthiest neighborhood in the area, and the other part of the zip code is low-income housing, it can skew somebody's total assets too high or too low based on those demographics. So that's why it's misleading. You can look at it, but it's important to know that it comes from financial assets as well as household demographics, and can skew your information. So it's not a solid number. The first rating to concentrate on in your file is estimated annual donations. And the only reason you have 2 columns is for sorting purposes. So the wealth screening company will give you dollar values, but if you tried to sort them, your 5,000s and 50,000s would all lump together. So they give you a rating score next to it of 0 through 7, 7 being the highest, which is $100,000. And that's the only reason you have 2. This information basically means what a person can give over a 1-year period if you are their top charity of choice. Another way to look at it is what a person can give to one or many charities over a 1-year period, depending on how many philanthropic priorities they have. But this is the bucket of annual donation money the Wealth Screening Company believes they can give based on their asset structure and charitable and political giving. The next score that you have in your file is gift capacity rating, and this is what a person can give over a 5-year period if you are their top charity of choice. You get 2 ratings. They mean the same thing. It's just for sorting purposes. You get a dollar range, and then you get the rating number that corresponds to it. So you have ratings 0 through 20, 0 meaning unable to rate, and 20 is 5 million plus. You have a tab in here called vendor ratings and scores, and that will kind of break down these different ratings for you if you wanted to refer back to them. You do have that information. If you try to look at the annual donation and gift capacity rating together, it might seem off because you're saying if somebody can give 50,000 over 1 year, then times 5, they should be able to give 250,000. But in this case, this person's rated $1 million, and that's because the Wealth Screening Company rates cash flow differently than all assets. So if your person has more stock, higher income, more liquid assets, then they'll have a higher annual donation rating. If they have more real estate and company ownership, then they may have a lower annual donation rating, say 5,000, because they're not as liquid, but they may have a gift capacity rating of $1 million, 5 million, and so forth. So because they're weighting liquid assets heavier in the annual donation rating, and they're looking at all assets equally in the gift capacity rating, you can't do a one-to-one match and do the math and go 5 times this equals my gift capacity. So if you're looking at the file and thinking that these don't match, that's why. You also get an influence rating in your file, and you get a rating of 1 through 4, 1 being the highest. And this is basically based on the number of boards that your prospect serves on. So if your prospect is serving on multiple boards in the community, they're seen as more influential than somebody who's not serving on as many boards. It doesn't mean the person with a rating of 4 isn't on a board that you want to get closer to, but if you're looking for the most influential people or well-connected people in your file, your ones would be more connected based on the number of boards they're serving on in your community. You also get political information in your file, political donation information. The reason that wealth screening companies look at this, and all of them do, they look at this for a couple of reasons. One is that they have seen that there is a correlation between political donors and their philanthropic giving. What they've seen is that people who give politically are looking to impact their community through their political dollars, and those same people are looking to impact their community through their charitable donations. So there's a correlation based on impact. It also shows you a level of discretionary income. So if you're looking at political donors and they're giving a certain amount of money away to a political cause, they have that same amount of money to give to a charitable cause. So it's showing you something about discretionary income. And then another study has shown that people who give $2,500 or more to a political cause are 4 times more charitable than a non-political donor. That's not to say that people who don't give politically aren't philanthropic, but those who do give politically, there is a strong correlation between their political giving and their charitable giving. You also get 3 planned giving ratings for bequest, annuity, and trust. And it's just important to know that for bequest, it's a yes or a no. Yes, there is potential based on age and capacity. If you want to see the exact breakdown of the different ratings for the age cutoff and capacity rating, you can look at your vendor ratings and scores. The no means they don't see the potential, and it either means they weren't old enough to meet the criteria or their capacity wasn't high enough. It's one or the other. And then for annuity and trust, you get ratings of 0, 1, 2. 0 meaning they don't see the potential based on age or capacity. And then the 1 is a younger age and a lower capacity. And the 2 is an older age and a higher capacity. So your 2s are older and wealthier. based on that. But if you want to see the exact breakdown, you can look in your ratings and scores tab. Income comes from two places, so this is another one to look a little closer at. It comes from reported compensation. So if somebody's working for a public company and their compensation is reportable, the wealth screening company can find it. If not, they default to household demographic information, and so it can be skewed. So when I look at it in relation to the other information in the file. So if I have somebody with a $500,000 plus income and they have, $5 million plus in real estate and other asset structures, then that tells me then that's most likely coming from public information versus somebody who has $50,000 here and then $5 million in real estate. That's telling me it's coming from a demographic source because it's not matching up. The next thing you have in your file is pension. It comes from an IRS Form 5500. It is public information for people who have private pension accounts for their private companies. It's actually a reportable piece of information and public. I've actually found them when I've Googled somebody, not looking for that, but it's come up. So if the wealth screening company finds that, they include that in the file. And I'm going to slide over here to show you how they pair that with quality of match. So each of your asset data points in the file is paired with a quality of match score. It's abbreviated to QOM or QOM. And so for this case, for pension, if they had found a high quality of match, this means that they match your John Smith at 123 Main Street in your city and state for this particular data point. If you have a medium quality of match, it means that they matched John Smith maybe on Main Street in your city and state, or Mary Smith at 123 Main Street in your city and state, but they're not matching exactly to the information you provided in the file. So those require a little more research to confirm. If you have a low quality of match, it means they're matching your John Smith in your state or simply a John Smith, but it doesn't necessarily mean it's your John Smith. And so a lot of those low quality matches aren't reliable. And then if you have a blank for a data point, it means they just didn't find that information on pension for your person. So you will have blanks throughout here because not every person will have all of these different data hits in the file. So that's kind of how quality of match works. And when I built your scorecard, which is the front of the file, I already did the work for you and paired your quality of match with your assets so that you can rely on your scorecard to know that it's already been paired with high quality of match data. So let's go back to your next asset data point. So you have, the next thing you have is real estate. So you have real estate value and then the number of properties making up that value. And there's a quality of match for real estate in the file. You also have stock information in your file that comes from two data sources, Wealth ID Securities and Market Guide. So when I built your scorecard, I looked for a high quality of match in one of those two data points. You have direct stock holdings. So direct stock holdings is what a person holds directly. It doesn't include restricted stock or indirect stock. It's only the stuff that they could actually sell and give to you. Total stock value includes everything that they can find. So it's direct stock holdings, indirect, restricted, stock held in trust if it's reportable on the SEC document, historic stock sales if somebody owned a company and sold out or was bought out and received a cash payment of their stock, anything like that is included in there. The next thing you have in your file is company information. And you have two data sources for that. You have Dun & Bradstreet, or also known as D&B, and you have Hoover's. So you look at company ownership value, and they also look at sales volume. And so for company ownership value, they look at the incorporation papers that are provided in Dun & Bradstreet or Hoover's. So if your person is listed as sole proprietor on any kind of corporate document, then they would get full ownership value. If they have 4 officers on the company and one isn't indicated as a sole proprietor, but they're all part of the original incorporation, then the wealth screening company will split it 4 ways because there's 4 officers. They don't take into account that someone may have more ownership or not because they can't see that when they run this through their system. And so they just split it equally. So if you see one and go, well, I know John Smith, has owned that company for years, and the other officers on that company are his sons, and he owns at least 65% of the company. That's information you may know more than running it through a well screening process. So just be aware of that. And for sales volume, again, it's Dun& Bradstreet or Hoover's. You may look at one of these and go, well, I know that company's worth a lot more than that. If it's a private company, they aren't required to report their sales. So usually the Dun & Bradstreet or Hoover's information is from a certain point in time when it was reported or captured in some kind of report. So it doesn't mean it's the most current when it comes to private companies. So just be aware of that if you see one and you're not sure why it's low based on what you know about the company. If you've provided giving information as part of the screening, then it comes back in the file, and I did use it when I analyzed your file for your scorecard. You get political and charitable donation information again in the file. Charitable donation information comes from online resources, so if a charity is putting their annual report, giving newsletter, donor lists online, then the well screening company can find that. And it's important to know this could be cumulative, a one-time gift, an annual donation society. It doesn't distinguish between the different types of giving that could be found online. It's also important to note that the highest quality of match you can have for charitable donations is medium, because we don't share our donors' addresses when we put them in print. So what the well screening company is able to match on is if you have a medium quality of match, it means they're matching on John and Mary Smith, so a spouse name as well, or John and his company, so they're matching on an additional piece of information besides your donor's name, and that's how they come up with a medium quality of match. And then for political donations, you can have a high quality of match for them because people are required to fill out federal election campaign paperwork when they donate politically. And so if your donor has filled that information out, then they can match back to it. A lot of times the quality of match is medium, and that's simply because if you've submitted the home address for the well screening, your prospect or donor is submitting their FEC paperwork on their business address or vice versa. So it's usually the address is off, but it's usually the same person when I've spot checked them. In addition, some other things to just touch on really quickly. They do look for aircraft owner and boat owner because these are two things that are people are required to register, and it is public information. If the well screening company finds that, then they include that in the screening. And it's paired with a quality of match for airplane or merchant vessel for a boat. You do have a children indicator in the file. You'll see a yes or a no or a blank. It doesn't mean they have children or don't have children. It means presence of children in the household. So it means, yes, at the time of a census or demographic information that was pulled, there was a presence of children in the household, or no, there was not. You can still use it for planned giving segmentation if you're looking for empty nesters and that sort of thing, and you want to look at the no's, then that's one way to do that. Couple other things to touch on in quality of match before we go into your scorecard are these Guidestar ratings. So the well screening company uses Guidestar as a source to find out if people are serving as directors on a foundation or a nonprofit. So for Guidestar director, if you have a high quality of match, it means they've matched your donor or prospect to Guidestar reports that show that your person is a director of a nonprofit. It could be a Rotary Club, serving on the board of a Rotary Club, a corporate nonprofit, family foundation, anything that's included in a Guidestar application. And for Guidestar Foundation, this means one of two things: that your prospect is appearing on the 990 of a family foundation as an officer, or they're appearing on a family foundation 990 as a donor. So now I'm going to flip back to your scorecard. I'm going to show you how to look at your scorecard. So this is all the work that was done as a result of the information we just went over. So the first thing I look at is people in your file that have given a certain amount or more to your club. So I look at donors in your file of $10,000 or more. I don't look at a date cutoff. I just look at cumulative giving, total giving. So if they've given $10,000 or more to your organization, as if they have, then they're giving higher than the rest of the file, and they're worth taking a closer look at for major gifts. And so that's why that's done. The capacity is split into two segments. People rated 100,000 to just under $1 million, and then people rated $1 million plus. And so if they had any of those ratings, they got a check mark. Annual donation rating, so anybody who had a donation rating of $10,000 or more through the screening, that 1-year donation period, got a check mark. Stock holdings, if anyone had stock hits and a high quality of match for Wealth ID securities or Market Guide, got a check mark. For company ownership, anybody who had a company ownership value of $5 million or more and a high quality of match for Dun & Bradstreet or Hoover's got a check mark. The reason we look at $5 million is that if this was the only asset data point they had, and it never is, but if this were the only one, and they were to give 3 to 5% of that away to charity over a 5-year period, it would still put them in a major gift category. It would put them at a 5-figure plus rating. And so the more their value is over 5 million, the higher that major gift potential. So that's why the cutoff is 5 million. But I always encourage clubs to look at lower company ownership value or higher company ownership value based on what you know about your community. For multiple property ownership, so if people had had 2 or more properties and a high quality of match for real estate, they got a check mark. For property value, if you're in an area like California, then the property value 5 million plus is used. If you're in an area of, like, let's say Tampa, Florida, we might use a property value of $1 million plus as the cutoff. It depends on your geographic area. So your file may say 1 million plus, or it may say 5 million plus when you're looking at it. In this example, it's 5 million plus. So anybody with a real estate value of 5 million plus and a high quality match for real estate, in this example, got a check mark. For charitable donations, so looking at charitable and political donations together, those 2 columns we discussed for medium quality of match. If you had a total combined value of giving of 25,000 or more for political and philanthropic giving from the well screening, and at least a medium quality of match for both, then you got a check mark. The reason that I look at them together is that because the quality of match isn't as high, putting them together and having a hit for both of them at least a medium quality of match for 25,000 or more gives me higher confidence in that particular data point. And so if I find that, I give them a check mark. Another thing that's done in the file is to look at age and club giving. So if you've provided the number of gifts that your donors have given, then we look at age 60 or higher, and at least 5 gifts or more to your club in the last several years. So most likely 2012 forward. And the reason that we go back a little bit in giving recency, the year, is that a lot of times planned giving prospects tend to lapse around the time of retirement. It doesn't mean they don't care about the organization anymore, but at the time of retirement, they start reassessing what's leaving the household. So they may drop off as a donor, but they may come on as a volunteer to your organization. So they shift kind of how they approach their giving around this time. So it's important to look back a little bit, but that frequency is really important. There's a study that shows that people who have given 15 gifts or more to your organization are 78% more likely to have already included you in their will. Planned giving rating, so that bequest, annuity, and trust, so if the higher ratings were in here, they got a check mark. And then for Guidestar, Director, and Foundation, if there was a high quality of match for either of these, there was a check mark. For Recency, this is an older example, but if I were to do your file today for recent donor, then I would use 2014 plus. And at the end of the year, I would raise that to 2015 plus, but we're looking for that recency. So in this case, this was an older file when it was done, so the cutoff was 2013 because that was the more recent information in the file. So most likely, if you have a file in front of you right now, it says 2014 plus, and if you get a file towards the end of this year, then you might have one that says 2015 plus, but this is to look at recency in your file. Then we go on to create some segmentation for major gift potential, upgrade potential, and plan giving potential. The criteria for your file is on a separate tab, but I'll talk through it. So for major gift potential, we look at the propensity to give, or that P2G score of excellent, the 1-0s through 1-5s. We also look at making sure that they have at least 4 of the following. So we look at real estate, million plus, multiple property owners, more than one, high quality of match for real estate, company ownership, high quality of match, stock ownership, high quality of match, higher income if it's supporting the rest of the data that's found, so 250,000 plus. The charitable political giving, 25,000 or more, medium quality of match for both. Influence rating, so if they have an influence rating of 1 or 2 being more connected in your community, then that's looked at. In addition, anybody who's given $10,000 or more to your organization is also put into this category to be looked at closer. For upgrade potential, these are your annual donation upgrades. So what's looked at in this case is propensity to give, or that P2G score of excellent or above average, so your 1s and your 2s. Also look at annual donation rating of 5,000 or more over a 1-year period, and a gift capacity rating of $25,000 or more over a 5-year period. Political donors, if they weren't political donors, it doesn't mean they weren't included in this segment, but we did focus on political donors a little closer. And then regardless of that, if they had given between $1,000 and just under $10,000 to your organization over the last several years, and they have a gift capacity rating of $10,000 or more, then they were put into the segment, because that says they're giving at a good level, but they're still giving below their potential, so there's the potential to upgrade. And you can see the breakdown of the criteria if you were to click on that tab. And then for plan giving potential, again, we looked at the propensity to give score of excellent or above average. And then we looked at people who were 60 or older, had given at least 5 gifts to your organization. If frequency of giving wasn't provided, the number of gifts, then we looked at people who had given $1,000 or more in the last several years to your organization that were 60 or older. Multiple property ownership is really important in this category. 65 plus multiple property owner, 65 plus stock ownership, company ownership, political donors. Those are the types of things that were looked at for this particular segment. The reason that this file is set up this way is so that it can allow you to filter. So if you're not familiar with filtering, if you were to highlight your file, so you click between your A and your 1, and you were to go to Data and select Filter, then you'll get these drop-down arrows. And you may say, well, I want to look at this major gift potential a little closer. So you click on that arrow and you uncheck the blanks because you just want to see those that have a check mark. In this case, 177 people landed in the major gift potential based on the criteria for major gift potential segment. And then you may say, well, of this group, I want to see my million plus group. So you can uncheck the blanks in there, and you have 11 people who met the criteria for major gift potential and are a million plus. And you may say, well, I want to know, are any of these people recent donors? And then you can uncheck the blank. And so you have 6 people in this particular example that had major gift potential, were rated a million plus, and were recent donors. So these may be the first 6 people you want to focus on. So these yellow columns are actually for you to do work in their file. So you may say, well, you know, these 3 people are people I consider top prospects and I want to focus on a little closer. And then through your training in AP, or if you've learned how to use a prospect grid to prioritize in terms of capacity, connectivity, access to your donor, and their relationship or affinity to your organization, you can rate them as an A, B, or C, or hot, warm, or cold. Is another way to look at that. So this line 4 may be a B. There's some work to be done, but they are engaged, but we need to build out a better plan for them. Line 5 may be an A, very connected, very involved with the organization. We just need to figure out exactly what we're asking for and move forward. And line 7 may be a C. We know of this person. We need to really figure out how connected we are to this person and ask our board or key volunteers. So by checking off who your top prospects are through the well screening based on what you know and what the well screening has showed you, and then start to prioritize them in terms of connectivity, capacity, involvement. You come up with your A's, B's, and C's, or your hot, warm, and cold, and then you can work out plans from there and prioritize your pipeline of starting with your A's, then your B's, and then your C's. And so that's why you have this set up that way. In addition, in your file, you have a summary of results page. So this summary of results page is really to provide you with an overview of the screening. So if you were to introduce the screening to your board and you weren't ready to kind of go into more detail about it and you wanted to give a high-level summary, then the summary page just tells you how many people you've screened, what their annual ratings were, what their gift capacity 5-year ratings were, as well as how many had major gift segmentation, annual giving segmentation for upgrade, and planned giving segmentation. So it's a good high-level review of the file. It's also advised not to share everything in this file outside your internal RD group, just because there's a lot of information, and even though it's public information, once it's put into a report, it becomes confidential. So it's important to be a good steward of your donor's information and just share, you know, these names came up as major gift potential in the well screening, and we want to look at them closer, just something like that. And you could always reach out to one of the consultants on the club services team to find out more information about how to use this data with your key volunteers and board members. And that pretty much concludes our well screening review for today. If you have questions about your well screening file, you can always reach out to one of the consultants on the Resource Development Club Services team. Thank you.